Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, March the 5th. I want to take just a brief minute to discuss what equity markets did last week, as it was a down week in markets, as the S&P 500 was the down the least on the week. It was down 44 basis points, or 0.44% on the week. The mid caps were down 0.88%, or 88 basis points, and the small caps, as measured by the S&P 600, were down 1.6%. So kind of reversing the trend of small and mid being the leadership so far year to date, and seeing a little more reversion back to the mean. But as we went over the weekend, we awoke Saturday morning to headlines of Operation Epic Fury in the Middle East, with the United States and Israel jointly attacking Iran and launching strikes in Iran. And those geopolitical headlines have been what's driving everything in the equity markets this week. We do have some earnings, and some great earnings that we've gotten through the week, but when you have big geopolitical headlines like we have going on in the Middle East right now, those are going to be what drives the market more. And so what was very interesting is we started the day Monday with the equity markets touching down around 1%, but we rallied throughout the day Monday and finished the day almost positive, or slightly positive, barely positive on the day in the S&P 500, up 0.4% in the NASDAQ. And what that was telling us, it appeared as oil was going up, and it told us that the market didn't feel like this was going to be something that was going to be a large economic impact to the United States of America. But with all of these geopolitical type headlines, they are going to create a lot of volatility in the marketplace. There's going to be headlines like we have today that Iran has hit a tanker in the Strait of Hormuz. You've got oil rising on the news of that, and stocks selling off on the news of that. These are going to be things that are going to come up during this operation that are going to drive the market up and down one way or the other. But underlying and underneath, there's some very interesting things happening. And so even on a day like today, where the market's down a significant amount, some of the software as a service companies are bottoming, and they're actually positive today. And we've seen a lot of positive momentum in that sector, the one that's been decimated so badly year to date. And so what's encouraging is just seeing that those are starting to rebound and recover. Now the market trend is still trending away from the Magnificent Seven, as they're still being sources of funds, or seen as sources of funds to buy the other 493 names in the S&P 500. And we expect that broadening to continue. But what we're starting to see is just that rebound, and it may be the time that if you're looking to find some positions in the marketplace, take advantage of the volatility that's going to be created by these headlines. For right now, the underlying economy remains very strong, earnings remain very strong, and earnings growth remains very strong. We have very stimulatory activities happening back in the U.S. with the tax returns, and expected to have an exceptional amount of tax refunds, which is a very stimulatory activity for the equity markets and for consumer discretionary, which has been lagging behind the market so far year to date. So if you have questions about how to navigate this volatility as it's going to come throughout the week, and as we're speaking today on Thursday, we talked about why there's volatility today. But if you have questions about how to navigate it, when to pull the trigger on some things and buy and sell, we'd love the opportunity to talk to you and walk you through how to do that confidently in your portfolio. And you can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.